Well, welcome to this special discussion on base metals on Facebook. You're watching BloombergQuint. If you look at hard commodities, we have had a strong run-up since mid-May when the commodities kind of bottomed out, and after several weeks, last week was probably the first when we saw significant correction. There has been exceedingly higher activity. If you look at the volumes, some of the metals saw up to 50% higher volumes in futures if you look at Friday's trading. And let's look at the price, what happened to price amidst all these volume activity. We could see copper falling by around 3%. We saw nickel falling by around 4.5%. We saw lead, tin, all these key metals actually down. So what is really happening with base metal? That's the big question this morning, and we are trying to figure out whether the base metal rally is kind of fizzling out. Is it time to book profit? Could there be a very significant correction? Would that have some ramifications for base metal or metal stocks in general in the Indian markets as well? And to answer all these questions, we'll be joined by our special guest, Jayesh. How does science really look to you?
Morning, Pradeep. So, just before coming here, I was doing some number crunching, and what I really found out was that from the August high point, most of these base metals have declined about 5 to 9%. So have a look at copper, aluminium, lead, tin, the base metals that you were referring to. All of them have declined significantly, 5 to 9%. The one that really stood out was copper. It's down 5% from the August high point, and also we have seen some bit of correction coming in. So let's get to the guest first. David, morning. The first question to you on copper: is this a technical correction, or are there fundamentals behind this?
Good morning, Jayesh. Certainly when you have a look at copper, we have seen a significant rally in the price, as you have said. But we do believe that over the course of the remainder of this year, we will see copper continue to perform on the upside. In the near term, the markets were somewhat concerned with the Chinese export and import data that we saw released on Friday, and that's certainly given them some concern that growth in China is moderating, and with that the demand for base metals, including copper. We've also seen some pressure from a higher US dollar in the near term, and whenever we've seen that higher US dollar, unfortunately we've seen a corresponding weakness in the commodity prices.
So to talk about China, if you see the data points suggest that probably last 3 to 4 months, the imports into China have remained more or less constant if you look at aluminium or copper or any other base metal for that matter. But when you compare it, say, year on year, do you think things are getting better, or are there really some signs of worry?
Look, certainly there's been a moderation in growth, as I said, but on a year-on-year basis, we still do believe that China will continue to be a major consumer of base metals. And certainly in 2018, provided we can see stable growth inside China of somewhere between, say, 6 to 7%, and that certainly looks like the numbers that we're seeing for next year, that we will see their demand for commodities, including all the base metals, remaining at relatively good high levels. And we say that primarily because China is now a bigger base in terms of the demand that it once had compared to the demand that it has now. So as that base grows, the need to feed in higher commodity volumes continues to grow as well. And that's really where we're pinning our belief that we will see better prices for commodities in 2018. In the near term, as I said, markets are somewhat concerned with the moderation in growth, and that's why we've seen that. Probably more of a technical pullback rather than a fundamental pullback.
David, on your 2018 outlook for prices that you just mentioned, would it be ferrous or non-ferrous? What would be your pick?
Look, at this stage, we think there'll be a broad recovery across all of them. We can't distinctly say that it will be ferrous or non-ferrous. What we can tell you, however, is it may be a little bit patchy within the commodities. We may see zinc rallying quite strongly because it continues to be already in deficit supply. And then we will see other commodities as they move towards more deficit supply in 2018, such as copper and nickel and aluminium. We may see them start to accelerate a lot more in the latter part of 2018. So it could be a year where we see a staggered price increase across the commodity prices, but we do believe it will be both ferrous and non-ferrous alike.
Okay. David, I would like to take forward the very first question that Jayesh asked you about technical versus fundamental. There was an interesting report I was reading recently from JP Morgan where they say that their own estimates by their commodity experts is somewhere around 30% below the current market prices, which means the big analysts are really not comfortable or they are not able to justify the current prices. Is there a room for significant correction to the tune of 10-20%?
Look, with the rise that we have seen in the commodity prices over the course of this year, one would expect to see some form of technical pullback. That could come on the premise of either a falling US dollar or a weaker outlook on markets going forward. So we do believe that the US dollar, we believe that the US dollar will fall during the coming year, and that's going to, create an increase for commodity prices. The markets may be looking for the US to actually see the US dollar rising, and that will cause a significant correction. So I guess the market is really, or we're certainly on one side of the coin when it comes to the direction of the US dollar. It, we believe, will fall, and that's going to cause the prices of commodities to rise. But the markets may be pinning the fact on a rising US dollar and unfortunately falling commodity prices.
So your long-term bullish call on commodities is very, very clear, but would you like to take a short-term technical call as well and suggest what kind of levels should we be looking at? Like, for example, I saw a call from Macquarie which suggests that $6,000 on copper is something that is expected in short to medium term during this correction, whether it's a short-term correction or maybe an intermediate correction.
No, look, we certainly can't see the copper price dropping to those particular levels, because as I said, the market is probably going to move into supply deficit in 2018. And once the players in the market start to get wind of that deficit coming in, that's going to keep support underneath the copper price. For the copper price to fall to those sorts of levels, we would have to see a considerable softening in demand, but also an uplift in supply. And at this point in time, we haven't seen supply being uplifted significantly, and nor have we really seen a dropping off in demand. So that would suggest to us that those two factors are going to be less of an influence, and that again pushes us towards a lower US dollar in 2018, and with that a higher copper price.
David, one last question from my end. How about aluminium? How are you positioning yourself on that metal? The Chinese import data showed that it was the lowest since March. So what's the call over there?
Look, at this stage, we continue to believe that, yes, China will act as a moderator in terms of their imports of aluminium. But we do think that when you have a look at some of the programs that remain outstanding in terms of infrastructure building, and of course our mind switches to the US and the significant program that could be introduced at some stage through 2018, that's going to give a very good lift to the aluminium price, given the type of infrastructures that perhaps will be built or reconstructed through the course of 2018 and beyond in the US. So again, we'd be very comfortable with watching a correction in the aluminium price, perhaps in the near term, and then seeing it bottom out very quickly and again resume an upward trend through 2018.
David, any particular level on dollar index you are watching for?
Look, at this stage, we think that the 90 level is probably about the lowest that we'll see in the short term. But we do believe that as we see other currencies start to perhaps strengthen as their economic cycles turn more positive, that we could see the US dollar index certainly falling lower than that. It has come off at significant highs of over 100. And at this point in time, we think it's just correcting while the market waits to see how the US does play out the interest rate increases or otherwise, and of course how we see the euro and perhaps the British pound reacting in terms of their own economy's strengths and weaknesses.
Yeah, so that's a call across currencies always. One last question, if I may attempt. I'm not sure whether you track the metal companies as well, but the kind of deficit you were talking about, what kind of likely implication you see for the profitability of metal producing companies, processors?
Look, certainly if you have a look at the results that we've seen from most of the resource companies to 30th of June 2017, they've been very positive on higher realised average selling prices. However, you've got to also take into account that most commodity companies have also been significantly cutting back costs. So we've seen the margins improving from both ends, both higher revenue and higher prices on revenue and also lower costs on their operating lines. So from that point of view, we would expect if we see prices to continue to rise over the course of next year, and perhaps we could see some volume improvements, that commodity companies are going to report very good 2018 results.
Well, thanks a lot, David, for taking time out for us. So, Jayesh, quite a bullish outlook that way.
Yes, absolutely. But that's the word coming in from David Lennox of Fat Profits. You stay tuned into BloombergQuint for more market stories. You can also log in to BloombergQuint.com. Thanks for tuning in.